Okay, what we're going to look at right now is look at a cash flow statement and reconstructing the debtors account so we can determine the cash component that needs to go in the operating activity. Okay, so what we need to do first is look at our balance sheet and also our income statement. Because remember, only cash items are recorded in the cash flow statement. So we need to reconstruct this account of the debtors and work out the cash component. So the way I always start this is looking at our debtors opening balance, and we write that in. So our balance from our debtors, we're not going to worry about dates at this point because it doesn't really matter, is $20,000. And it's going on the debit side because debtors are debit in nature. Then what else goes in this account? When we make a sale, what we do is we credit the sale and we debit the debtors. So we have made sales of $50,000. So that's going to go on the debit side of $50,000. Sometimes during the accounting period, not all our debtors pay their accounts back, so we need to write them off as bad debts. So we need to look in the income statement to see if there are any bad debts. And as we can see in this example, there is bad debts of $1,000. That's going to reduce the debtors account. So we need to write the bad debts off by writing them on the credit side. Bad debts, $1,000. Then we also need to look at, are there any discounts? Did we give any discounts to our debtors for paying their accounts on time? If so, we need to minus them off the accounts, so put them on the credit side. So discounts, if I can spell discounts correctly, whoops. Let's fix that quickly. Discounts. And they are $2,000. Sometimes when debtors don't pay on time, we can charge them interest. In this example, there's no interest being charged, but if there were, we'd put them on the credit side. So all we need now to is balance the account out and work out the actual cash component. Now the cash component is the money we have received from debtors. So that would be on the credit side. So cash, and we want to work out this amount right here. To work that out, we need to formally balance off the accounts. So draw your lines. And then we look at what is the closing balance of our debtors. It is $30,000. So here we write back in pink, balance carried down is $30,000. And that also goes down the debit side because it is debit in nature. So on the 1st of July, balance brought down is $30,000. So if we look at our debits and credits, we know that we've got the most amount on the debit side. So that's $70,000. That needs to go here, $70,000. And $70,000 needs to go on the credit side too, because they're both, debits and credits must always equal. So if we look at this example here, what will cash be? So this credit column equals $70,000. So we should be able to work out that it is 70 minus 30 is 40, minus another 3 is $37,000 is the cash component. And that is the amount we have received from debtors, which will go in the operating activities on the cash flow statement.